This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this StockBox interview.
Well, today I'm joined by Eddy, Travia and Ben Profitt, Chief Executive and Executive Director at Coinsilium. It's great to have you both back on. It's been a little while. How are you both doing?
Yeah, not bad, thank you.
Fine, thank you.
Excellent. So you released a pretty comprehensive strategic update this week, covering everything from the balance sheet and existing investments through to your plans for the future. And we'll dive into some of the details shortly. But first, can you give me a quick top-down view of the update and what the key message is for shareholders?
Sure. I think really the key message we're trying to get across is that we are not a pure play Bitcoin treasury company. The company's core business has always been that of an accelerator and a venture builder, and this remains true today. So really what we're seeking to accomplish here is to refocus on that core business as our primary means of generating value, but as supported by the Bitcoin treasury function, which adds a lot of financial firepower to the business. So what this means going forward is that the creation of shareholder value is not going to be stemming from us sitting around and waiting for the price of Bitcoin to continue to grow, but it's instead going to be from us leveraging our expertise in the sector through the venture business, through our strategic portfolio of assets, and indeed supported by the treasury function. Now, this obviously doesn't mean we don't believe in the future prospects of Bitcoin. Obviously, we do. I mean, this is why our treasury function is denoted in Bitcoin. But what we're seeking to explain here is that we're not sitting around waiting for it to accumulate. Our core business is how we're going to generate shareholder value, and that the Bitcoin treasury function is there as a support and an additional sort of value add over time.
Understood. And yeah, following on from that, a major theme running through the update is your expanded focus on the digital asset sector. Eddy, can you tell us a bit more about that? Is this an evolution then of the strategy you were already pursuing rather than a complete shift? And what does it mean practically for shareholders moving forward?
Yes, certainly it's an evolution in the sense that since the beginning, our main purpose has been to provide exposure to retail, to ventures in the blockchain technology and the digital asset space that they may not be able to find on their own, because it's quite a specialist type sector. And also, as Ben was pointing out, leveraging our network in the sector that we have been building over more than 12, 13 years now. So it is an evolution, but I guess underlying blockchain technology is now getting used by more and more in more and more sectors as well. So, for example, the specific sector we highlight and is the basis of this expansion is prediction markets. But actually, prediction markets work much better because of blockchain, and it's kind of a very natural fit with blockchain. And some people may look at it more like gaming, but actually it is very interesting because a lot of the things that you can do with prediction market actually would work differently if you were not using blockchain technology, because blockchain technology brings all this transparency, and as well you can check everything. This kind of everything is verifiable on the blockchain. So it's very much in line with what we like in this technology, and I think there is a big demand as we can see, as we pointed out in the update. One of the leaders, Polymarket, which is actually running on an Ethereum layer 2, so it's a blockchain compatible with Ethereum. Their trading up to date is more than $22 billion. So obviously it's a great use case, and it's a great example of success of a very large kind of globally used platform that is actually using blockchain technology. And it also uses, of course, cryptocurrency or digital assets in the way it works, but not only. So that's only part of it. It uses the technology quite broadly.
Great, yeah, and we'll return to that predictions market opportunity in a moment because that looks really interesting. First, though, you also provided quite a detailed look at the balance sheet, which looks pretty robust. In what remains a fairly volatile crypto environment, that strength feels particularly relevant. So, Ben, can you talk us through, how the company is positioned today and what your funding needs look like over the near to medium term?
Sure. Well, I mean, we obviously can't speak to numbers that we haven't already put in the public domain. But I think it's quite clear to shareholders that over the course of last year, we raised about £17 million in equity funding and deployed about 15 of that into Bitcoin accumulation into our Treasury function. So when you take the net residual from that, and you combine it with our previously reported cash balances and infer our corporate run rate from our previous financial statements, I think it becomes quite clear that even as we stand today, we have well over a year's worth of runway to run the business and continue to develop the core activities before we even need to start considering additional funding. So obviously in the sort of near and medium term, we're well funded, but also importantly, we've got a variety of funding options available to us now. So we're not reliant on any one source of funding. So well funded for the medium term and plenty of optionality going forward.
Great, yeah, and that's obviously important in this market. Something else that stood out to me was the reaffirmation of your strategy to pursue non-dilutive methods of increasing Bitcoin held in Treasury, which, as we've touched on, was obviously a big theme last year. Eddy, what sort of market conditions or opportunities would allow you to execute on that approach?
Yeah, I think the type of market conditions we would need for that to occur is some of them are more in our own environment, meaning that obviously if we have a successful investment or a successful portfolio asset, and maybe there is some kind of dividend revenue, or maybe there's some kind of sale of either tokens or equity, then I think obviously that would be a non-dilutive way to possibly allocate, obviously with the board approval, but possibly allocate part of that to buy further Bitcoin. I would say what we describe as well in the announcement is that right now the conditions are more difficult because in the sense that there is not as much readily available capital as there was when we raised funds back in the summer last year. And for those who follow this sector, unfortunately, we have this kind of gap between the fact that when there is a lot of, let's say, interest from the retail market, that's usually happens when the price of the asset of Bitcoin is quite high. And when the Bitcoin price is lower, like it is now, there is a bit less interest, and that's why we have usually this kind of gap happening, where it's a bit more difficult, for example, to get access to capital at this time. So, but yes, again, the conditions are not necessarily the external conditions, but they are more what happens in our portfolio, what happens with our assets, and how this can help with potentially acquiring more Bitcoin.
Great, yeah, slightly different approach for a slightly different market then. So another major area of focus, which we have touched on already, is that expansion into prediction markets and event-driven finance. Just to step back for a second, the viewers who may be less familiar, could you start by just running through what exactly prediction markets are? Eddy, I don't know if this is another one for you.
Yeah, that's fine. Well, I mean, I think people may have heard about it because, for example, during the election year, for example, in the US, many people realized that there was sometimes some differences between the official polls and what already were prediction markets at the time. So, for example, one common question on a prediction market could be, will X win the election in a certain country, for example? So in that sense, that's why I was referring to gaming, is that it's very much probability based. So you would say you only have two choices, is yes or no. And at the end, when the event actually happens, the information is fed into the contract through what we call decentralized oracles, which are basically channels to channel the information to the contract. And for example, if X has been elected, if the answer is yes, then that contract becomes, the value of that token, which is the bet that you've made, becomes 1, and the other value becomes 0. So there is only one winner for each contract or each market. So it's very interesting because it's starting to be quite used by, for example, media, used by maybe in the financial realm. People are looking at it thinking, well, if people are betting and are putting money or are choosing this contract, then maybe it could be more reliable than a poll, for example. So we have seen this happening. And of course, now people are using it as well to trade. So there are some arbitrage opportunities and so forth. But what is very interesting is that it could become away from a kind of a betting platform. It could become into what we call a real-time global probability layer. Very, very global in the sense that if you use blockchain, then basically you remove a lot of barriers and maybe anyone could use it anywhere.
Definitely, yeah. And you're right, it is something that we've been seeing all over social media and everything over the last year. Yeah. And bringing it back to Coin, what should investors be watching for next with regard to your exposure to the sector?
So as I was saying, it's growing, and there are some very natural overlap or compatibility with blockchain technology. We never look only at one side. We look at all the possible avenues where we could find an interesting opportunity. For example, all these platforms need some type of infrastructure, and of course, at the same time, they produce a lot of data and so forth. So what we explain in the update is that we are talking to a venture, and we are in the quite advanced stage of negotiation. And once this is done, we will announce, of course, in the market, and we will explain much more precisely exactly the opportunity for Coinsilium in this space.
Okay, that's another one to keep an eye out for then. And finally, one of the nearer term developments that's generating a lot of interest is Coin's stake in the Yellow Network token and trading platform, which is due to launch next week. I think it's March the 8th, isn't it? Ben, can you explain how the Yellow Network ecosystem works in practice and how that translates to potential value for Coinsilium and its position?
Sure. I think in terms of how Yellow Network works, I think I'll pass that one to Eddy. In terms of the sort of impact on our portfolio, being the accountant, at the moment, our investments in the network take the form of essentially a prepayment. So it's a simple agreement for future tokens. So we're holding that at cost in our financial statements. But once that matures and we receive our token allocation, obviously, that is subject to a vesting period. So the actual access to tradability, etc., vests over a period of time, which is fine for us because, of course, we see the long-term future in this project. But at that point, once the investment matures into tradable tokens, albeit locked up, then we move to a mark-to-market approach to valuing it. And of course, at that stage, there will be a market value publicly available akin to any other token that exists on any other network or platform. So at that stage, then we'll be accounting for the investment at each reporting date, demonstrating the movements in fair value over time.
Definitely, yeah. And Eddy, you see a lot of value in Yellow, obviously, moving forward.
Yes, because we believe that Yellow actually answers a lot of the problems, let's say, or the past issues or potential issues with trading digital assets over blockchain and obviously over the internet overall. But when a user is using a centralized exchange, is kind of betting on the fact that the centralized exchange will survive, will not be hacked. So there is a very much a trust issue with that exchange. You want to make sure that it's not going to fail, right? Because for obvious reasons. For Yellow as a different approach, it's quite blockchain agnostic, so it works on several blockchains. And the way it does the order matching, it's off-chain. So basically, it's very fast. We're talking about speeds that actually centralized exchanges reach, because obviously centralized exchange in their trading do not use blockchain at all. They only use blockchain back and forth for withdrawing or depositing assets. But on Yellow, it's off-chain order matching, and it means they use the analogy of the bar tab. So, for example, when you go to the pub, you leave your card and then you can order drinks. So that's kind of the trading part. You don't need to pay each time, so you don't need to settle each time. And at the end of the evening, you go and pay, and that's kind of the settling and what they call the smart clearing on-state channel that you can do with Yellow. And throughout the time, the collateral or your card in the bar tab analogy, the collateral is actually remain under your control through a smart contract. So it's quite a very innovative and different way of doing cryptocurrency trading, where you mix the speed of very fast trading and the security of this setup. You don't have a single entity that you need to trust. And the interesting thing is that it's spawning a lot of different projects, and Yellow now has actually hundreds already of projects building on their technology, which is interesting because Yellow itself is not a blockchain itself. And so they found a very innovative way for anyone to build, and it removes a lot of the barriers if you were building on a different blockchain, for example, because it actually solves one of the essential issues, which is cross-venue liquidity access. It doesn't silo liquidity between different blockchains or exchanges. All the liquidity is there. It's kind of available, if you say, and they have what they call the shared clearing rails, and basically you can use this liquidity as a trader when you trade, and it means all the projects that are now building, all these hundreds of projects that are building, will have access to the same unified liquidity. So that's quite interesting, and I guess that's why they see so much interest in their technology, because it dramatically lowers the barrier to entry for launching this kind of trading venues. So yeah, we are very optimistic, and we believe very confident that Yellow can do well on various levels. The ecosystem, and as we mentioned in the announcement, in the update, we want to work more in this ecosystem because obviously it brings talent, it brings interesting ventures, and all building in the Yellow ecosystem.
Great. Well, plenty to look forward to from here then, and we'll be keeping an eye out for further updates. For now, Eddy and Ben, thank you both again for your time today, and I look forward to catching up again soon.
Thank you.
Thank you.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at StockBoxMedia.com. Thank you for watching.